Hey traders, it's Greg from Trade90X, and always excited about doing the education series for Trade90X. Today we're going to do education series video number 7, and I call this No BS. Do you want success? Let's get right to it. I get so many traders that email us and want to make money. Please show me how. And I always get so many traders that have such unrealistic expectations. So in this lesson, no BS, do you want success? I'm going to go and lay out the Trade90X statistical edge plan. Before we get started, all information we provide is for educational purposes only. Please consult your financial advisor or accountant before making any financial decisions. All lessons that Trade90X provides are part of the process we believe is the highest probability for success. At Trade90X, we always trade with a statistical edge. What does that mean? We've always backtest our numbers over time like a casino. We know over the long term our plan wins. We always understand the right information, how to find it, how to execute it, master risk, be accountable. Losses are part of trading. Our process is mechanical, systematic, repeatable, and replicable. And you always must identify what type of trader you are based on time, resources, and personality. And we always support our traders through our Trade90X Mastermind group. So again, let's get into this lesson. No BS. Do you want success? Bottom line is this. When I always explain to traders what it really takes to build a plan, with an edge and to pull money out of the markets consistently, most traders, it's weird, they seem to pass and they'd rather go and find some get rich quick scheme, YouTube videos where the presenter shows these ridiculous gains, tells you how easy it is. And listen, I'm here to tell you, listen, for somebody who's been in business for 25 years, trading for a long time, building business, I understand risk. Nothing could be further from the truth. So it's time to wake up. And it's really no wonder why only 5% of traders succeed. Unfortunately, there's no, here, I spelt it wrong. There is no blue pill. I wish there was. But seriously, if you really want success, there is a way to do it. It's just, if you want to accomplish your goals, it's going to take some work on your part and a plan. And so are you ready? Let's jump into this. Again, regardless if you swing or day trade, you must follow this process if you want success. Okay. Now, to get started, we always recommend, starting small. Doesn't matter how much money you have, 3,000 to 10,000. Build a proven track record. Once you have a track record, then and then only can you risk more capital. It's foolish. I don't care if you got $10 million, 100 million. It's foolish to go into the markets and until you understand how they work. So let's go through the list of what we do with all our traders when we start the process and how we help build the plan and statistical edge, and why Trade90X is one of the go-to places for not just education, but for support. So first, number one, as I mentioned before, you must learn the right information. Okay, how to use it, how to execute it, how to be accountable, and master risk. If you can't do those, you're going to find it very hard to have success in trading. Number two, learn how the markets work. Very simple. Smart money, banks, institutions, hedge funds control the markets. Retail traders do not. It's all about buy and sell orders. More buys, market goes up. More sells, markets go down. But 95% of the market is controlled by smart money. We need to learn how that works and just follow it and make our peace. Number three, learn how to backtest and journal your numbers to build a statistical edge. You're going to hear me say this a lot. Without these steps, you're guessing, and we never guess at Trade90X. Number four, learn the market context. Who has control? Is it obvious? Are the bulls winning, the bears, or the range markets? You have to be able to identify that. Our goal is we want it as obvious as possible, and we want the path of least resistance. All right. Number six. Number five, learn to identify, is it a trend, a range? So when I say trend, it's either a bull trend or a bear trend. Is it a range day or a multi-trend day? And when a multi-trend day is when it is either ranging and goes to a bullish trend or ranging goes to a bearish trend. So these are the type of things that we, teach our base on what to look for every day. And you have to learn how to trade each one of them. Okay. This is part of that plan of success. Understand your setups for each type. So regardless of what type of day it is, once you've identified it, you need to know what your setups and how to trade it. Risk. Now, this is, again, part of our process. If you can't master risk, you're never going to be successful trading or any business. So we recommend 2% max. You never risk more than 2% of your total account on any one trade. When we look at trades, we never look at trades unless they have space of at least 2 to 1 per trade. We never risk more than 5% of our account per day in any one, session. This allows you to keep yourself in check when, because everybody has bad days. So you must have systems in place to make sure that you don't overtrade, you don't revenge trade. So by having these hard, fast numbers, these allow you to have, to help you build that statistical edge. Number 8, we only trade when conditions are optimal to risk capital, and when it's not, we pass. And I use this analogy like surfers. You ever watch surfers? They sit out in the ocean, and they could be out there for hours, and they just sit and wait, and they're looking for that, those A set of, waves, those strong momentum waves. They never surf in, and you ever see they're calm, they're relaxed, and they're patient, and they wait. Some days they'll get 10, waves in a row, and then some days they'll get one. Well, trading is no different, but they understand patience, waiting for the right momentum wave, and trading is no different. Number 9, key data to focus on. Now, trading on the X, we keep it simple. We look at the S&P. 75% of the market follows the S&P. The 11 sectors are very crucial. Again, when the S&P is bullish, we want to see those 11 sectors in sync or confluence. If they're bearish, we want to see them bearish. And then the level of volatility in the VIX, that's very key. Understanding how that works, is it low, medium, or high, will help determine the trades, and that's something you learn trading on the X. What we want to do is we want to see these 3 things aligned to give us clear direction. This is going to help build your edge. Now, building your business plan, your trade plan, includes backtesting, journaling to build your statistical edge. Do not even consider to trade live money until you've executed this. So what does that mean? We start with one symbol. We recommend to our clients, you start with the S&P, you start in one time frame. Okay. Now, every symbol that you want to trade, you need to go through the same process if you want to build an edge. We use one time, for entry, stops, targets to build our numbers. Again, as I told you, we never risk more than 2% when we're doing the back test or live. We only take trades that have a space minimum of 2 to 1. We never risk more than 5% per day in losses. We only trade when the market context, the order flow is obvious, either to the bullish, bearish, or if it's a range, then we either pass or understand our range trades. Bullish trades, we always trade off some kind of support or includes trend lines. Bearish trades, we always trade off resistance, or that includes trend lines as well. We focus our trades typically at 9:30 Eastern to 12. Why? Because these are the highest liquidity time, and price action is going to be the smoothest. We journal every one of our trades. What does that mean? We snapshot and journal every trade we file it by year, month, and symbol. We label it by date, and we also list what type of day we traded. This makes it easy to review our journal when we go back and look at our daily, weekly, monthly, yearly. And again, I like to do this where I look at it. So I want to go and review trend days. I want to go look at range days. I want to go look at multi-trend days. So by filing it by date and what type of day you trade, it makes it very easy for your journal review. So how do we really get into the nitty gritty and build our edge? Again, it's all through numbers. So what we have our clients do is we pick one symbol, one time frame. We focus on minimum of 50 to 100 trades. I prefer the 100 trades, but again, that's fine if you do 50, but the more trades, the more body of work. Once we have a solid body of work, we can then look at our numbers, and the numbers, again, our goals are, did we follow our numbers? Based on the 100 trades, we look at, now win rates is last, but I have it here first. Did we accomplish at least a minimum of 50%? Did we average on those 100 trades the 2% risk? We shouldn't have had more. Did we average the risk reward minimum of 2 to 1? Never risking more than 5% in losses per day. And again, did we follow those numbers, over the thing? Then we also list on those 100 days, what type of day we traded, what time we took the trade. We also look at, did we do a good job of managing the trade from entry to target? After the 100 trades, after the 100 trades are accomplished, our numbers listed below, we're ready to move to live trading. This process helps us build, again, that systematic, repeatable, scalable plan. Again, do not trade without these numbers. Numbers give us the statistical edge. Numbers give us realistic expectations on what we can make based on our starting balance. We never guess at Trade 90X. So let's get into an example, and then we'll get this video ending, because I like to keep these videos short and sweet, right to the point. So examples of why you must need to know your numbers if you want to succeed at trading. Let's just say we're starting with $10,000 and we're able to accomplish our minimum goals, like we listed, above the average win rate 50%, our average risk per trade 2%. We're able to stick to our 2 to 1, never losing more than 5% in losses per trade. We understand market context. We know how to identify the type of day we're trading. Let's just say we've got that down. And again, the numbers will never lie. After the 100 trades, you'll know whether or not your numbers are telling the truth. Now, in this 100 trades, I say it's, again, 10K. Again, you can do 50, but we prefer 100. Let's just say, again, 50% win rate. So now you have 50 wins. You've hit your 2 to 1 risk reward, only risking 2%. That would be $400 per win per the 50 wins. Sorry, I don't know why I had 25. Would equal $20,000 in profit. Let's just say now we hit the 50%. 50% losses with only risking the 2% would equal $200. That's $10,000. That gives us, for every 100 trades, we understand that our win rate, again, it could be higher, could be a little bit lower, but again, our focus minimum is 50%. We know we're at 2 to 1. We're risking only 2% or less. We're never losing more than 5%. Now we have a real plan. We understand, after 100 trades, like a casino, over a body of work, we have a statistical edge. Because why? We understand our numbers, we understand market context, we understand what kind of day we're trading, we understand the setups. And if we follow our numbers over a body of work like a casino, we know that over time we're going to win. Now, bottom line, unless you have a plan and process that has been back tested with real numbers like we just explained, you're going to find it difficult to have success at trading, or any business for that matter. You must be willing to put the work in to learn your numbers and journal every trade. This is how we build a statistical edge over the markets. This process gives you the confidence to scale your business and curb your emotions. Again, when you know your numbers, you're not all over the place, because when you don't know your numbers, then you're panicking. But if you know your numbers over a body of work, you're calm. Even if you go through a string of losses, you know that your process, like a casino, they know they're always going to win money over time. And that's what we're trying to do. Will there be losses? Yes. Will there be drawdown periods? Yes. But again, when you have a larger body of work, say 100 trades or more, you know over time, like a casino, you're going to win. The numbers don't lie. And again, if you backtest and then after the 100 trades, your numbers are not coming out well, then what you have to do is you've got to go back and do it. And not until your numbers hit our minimums do you earn the right to trade live. Why would you go in and trade live if you can't even do it in the backtest process? Okay, and this is where I see a lot of problems. Most traders, again, they want to go to YouTube, open up an account, watch a few videos, buy a shiny indicator or this and that. The problem with most of the people on YouTube, and again, take it from somebody who's been successful in business, they're not giving you a real plan. If a plan does not include in your process numbers that have been vetted and back tested, then there's really no shot of making money. So I'm going to end this educational video there. If you have any questions you didn't understand or need more explanation, again, just hit us up at hello@trade90x.com. Again, that's hello@trade90x.com. We look forward to hearing from you. Again, we do these videos so we can help traders get on the right side of the market and make money, and understand what it really takes, and what, to have realistic expectations when they get into trading or setting their goals. So I'm going to end it there. Trade safe.